So let's chat at Karyn Musil. Hey, Karyn, number 3 on the issue paid month to date leaderboard and number 2 on the submitted leaderboard for this last week. So let's chat. Let's talk about your week. Nice app count.
Thank you. All right, so on my week here, I had a couple of families that I was able to help out, and my screens are jumping around a little bit on me tonight. But one family, just getting them covered with accidental plans to start with, and then meeting again with one of my para families and was able to get the annuity done for the mom and cover 2 more of the daughters on basic MOO IULEs. So.
Oh, that's cool.
And
so talk to us about the annuity. What in her financial situation, what made the annuity an opportunity for you, and explain what the para lead program is for new people.
Para is public employee retirement accounts, so people with pensions. And I help a lot of clients here in Minnesota who have pension plans but don't understand what that looks like for them for their retirement. For her, she had just, I think, just under 10,000 in her current 457 Roth account, but she's old enough that she could roll that out while she's still working. So we did that and just moved that her Roth payments will be indexed for her. So as she gets closer to retirement, those payments are no longer riding in the market, so that she knows that money will be there for her.
Did she lose money in that account?
Oh, for sure. Earlier this year, it had gone down.
How much?
I don't recall specifically on hers.
Yeah.
But yeah,
She was motivated, in other words.
Lost. So.
Yeah, that's cool. And then you seem to like the Mutual of Omaha it's IULE, right?
Yeah.
Index Universal Life.
I'm just trying to get something better than a term at a affordable cost for clients that want to know that plan's going to be out there for them, but aren't so much trying to build a tax-free retirement through that plan. They just want to know there's going to be a death benefit there. I think the IULE is a very good fit.
Right. And the IULE is better, in my opinion, better than whole life because the ratings are better per thousand. It is an index universal life product, simplified issue. But the interest rate's pretty conservative, right, Karyn? Like, it's pretty solid in terms of not being overly optimistic as far as illustrating cash. Is that right?
Correct. Usually if they pay in 30 years, they could possibly choose to stop paying in. But again, that's just to support their death benefit versus having their death benefit grow when they're in their 90s or something, if they continued to make payments at that point.
Yeah.
But yes, it does illustrate low. Plus,
you can get higher death benefit amounts as a result as well. So like our whole life, some of the whole life maximum death benefit with our other carriers are like 25,000, 30,000, 40,000. I don't think there's anything above 40,000 for whole life. But with the IULE, you can really write large amounts. And so that's kind of the way I look at it too, is for someone who wants a larger amount of term insurance, life insurance, and their health will qualify for it. And it's simplified issues, Snowball and Urine. So talk about the underwriting, aspect of that product, Karyn.
It matches Mutual of Omaha's term. It's the exact same application. So they have to be healthy enough to qualify for term, but when they're wanting something longer than term, I find it to be a good fit. And with these two applications, I had the immediate approval at the time of the second signature because the application uses the midpoint HIPAA signature so that the underwriting can be done while you're filling out the health section.
Yeah, that's pretty cool. So what Karyn means by that is you get the client at the beginning of the application. It's like soon, like where the client signs off on the HIPAA authorization, which then allows the MIB to be done while the client's filling out the health information electronically, right, Karyn?
Yes.
Yeah, the electronic app. And then, so then, once it clears the MIB and all of that, they potentially can get issued like right away and without any blood urine test. So, so when we say they have to have a good enough health for it, oral pill diabetics can get into it, right, Karyn, at the same rate, like as the standard health rating?
I believe so. There are a few diabetes questions, but it's very clear cut that it's a knockout. They're knockout questions. So as you're doing it,
Yeah.
yes, they're not going to be approved.
Yeah. And that makes it better because not to submit it, that you can't submit it. And I think Mutual of Omaha is one of the companies, they're real sticklers as far as diabetes diagnosed prior to age 55, right? Like that's pretty much a no-go as far as my experience with like Term Life Express. They're not as liberal as Forrester's with
Right. Forrester's is definitely more diabetes friendly of a company that didn't come up with any of my recent clients. So that's why I'm not real sure on exactly what the guideline is there.
Yeah, they're pretty hardcore. It's like interesting how different companies are friendly. And you're gonna, as new people out there, as you start writing more policies, you're gonna tend to gravitate to the companies that are friendlier to certain conditions than others. Just in general, Foresters tends to be more friendly to diabetics. Mutual of Omaha, not as friendly to diabetics. And it's that magic 55 years of age threshold that sort of the demarcation line. But Mutual of Omaha has some really, really advantageous products for your clients. And then it's an email signature, right, Karyn? Like they send the client an email. Like if you're not with them face to face, if you're with them face to face, they can just click on the application, right? But if they're not, they send an email to the client's email for signature authority. Is that right?
Correct.
Yeah. So, so that's one of our favorite products. I think you also like Advantage Plus Whole Life with Foresters.
Yes.
So, because you've written both IULE and Advantage Plus and actually Smart UL even, like what makes you choose one over the other? Like what kind of things that you tend to like for IULE versus like Advantage Plus or Smart UL with Foresters and vice versa?
Well, like with this client for the larger IULE here, I did compare to the Foresters increasing whole life is how I explain it to a client because it has dividends added on. And she has, we've talked about many policies for many people in her family, and there's more, as you were saying, John has more to come. I know I have more to come from the household as well. But as we're going through different things, it's, as you said, whole life is more expensive for a lower death benefit. You know, you do have guarantees in whole life that you don't have guarantees in an IULE. But as you said, it's illustrated very conservatively, and there isn't a lot you can mess up in the illustration. I just use the easy solve.
Yeah.
And I'm confident that that's going to support over time for the client. So as we're talking about all the different possibilities, she didn't even look up from her paper as she's taking her notes, and she said, well, what do you have? And this is something that Jeff Bright has specifically brought up on the calls I do with him each week, that, you know, you can tell what animal someone is, and that's one of the questions they will ask is, what do you have? And that's the first time a client has just straight out asked me, what do you have? And I was able to say, I have both. I do have a forester's growing permanent Advantage Plus policy. I do have an IULE. I think there's room for both, and I see the advantages of both. So
I love that.
But it could have been a difficult position
If you,
if I didn't have them.
oh
You
my
know?
gosh, I love that.
So, and, you know, certainly being in the business over a lot of years now, I have added as new products have become available. So,
You know, I just
overinsured probably, but
Yeah.
that's okay.
Al, I don't know. I never look at it like that, you know. It was what I was saying last week, right? I was talking about with Tim Walker being his own best customer. It's really interesting how because, you know, I talked about how I bought my first policy right away because I wanted to feel like if someone asked me that question, I could pull my policy out and show it to them. And lo and behold, it happened to you last week where someone actually asked you that question. And so you told them you had both. That's so cool. I love that. Now, for the people out there that aren't familiar with Jeff Bright and the animal thing, you know, explain briefly what, you know, kind of that personality profile thing. And then what was it about that question that pegged her as a particular type of animal? And how did that help you maybe relate to her or how to talk to her?
Okay, I am looking at my notes. It is the otter that would ask, what do you have?
Otter. Okay.
And the other animals are the golden, the lion, and the beaver. And Jeff has a test you can take on those. And actually in our recent calls, and part of what he said that Mark may be breaking down a little further at breakthrough with us is even within those four, there's kind of a division of each animal.
Yeah.
Two animals as well. But just in general, the otter asking, what do you have? The lion is who's going to ask, how much does this cost? The golden wants to know, is this going to protect my family? And the beaver is the one who wants the details, all the details. So as we, and I think he just said it's 59% of the population or something are Goldens. So is it going to protect their family is kind of the most important, most common thing that we would need to answer for a question for a client.
Yeah. And you mean, and so what Karyn means is golden retriever, golden retriever. So that's what she means by golden. But yeah, so this is when you guys have an opportunity to come to our functions, these are the things you're going to learn, the extra stuff you're going to learn on how to read people and how to sort of put people in categories that you can understand so you know how to relate to them. And so that you're never really put off by the questions that they ask, right? But, nothing like being ready to answer that question with having your own policy. So that's so perfect. I love that. That's great. So when she discussed, when you told her you had both, did you lean her towards IULE based on her requirements, or did you kind of talk about both and then let her pick which one she wanted?
I completely let her decide what she wants to have. She has a little bit of a tougher internal battle that she was working with, is that she has a prior policy that's $1 million term that's gonna expire when she's like 72.
Wow.
She is in her early 60s now. So do you keep making the payment on that $1 million policy, knowing there's a pretty good chance you're going to outlive it? Or do you redirect those dollars to something else? And again, that wasn't a decision I tried to make for her.
Right.
And in the end, I think she came to a pretty good solution on it, that right now she's keeping the $1 million policy, but she started this other one and she knows she'll always be able to afford this other one. And if she decides she's thinking about giving up the $1 million policy, she'll tell her kids who are the beneficiaries, hey, there's another 2, 3, whatever years left on this $1 million policy. I'm retired now and don't want to pay it. If you want it to be there for the next 2 or 3 years, you pick up the payment on it. But she knows she's set up this permanent one, that there will be something for them.
That's cool. It actually is a great idea. Here's the thing that Karyn knows her client because she asks the client questions. And by asking questions, the client really ends up coming to the conclusion on their own. You're putting the guardrails on the decision by asking the questions and informing her of her options. And then she made her own decision. Some clients, an auditor will be the type of client that will make that decision on their own based on the information, right? They gather information and then they want to make a decision based on the information they gathered. And the Goldens, where most people are, is they're motivated immediately by that emotion of, protecting their family and so, sometimes you have to guide the client more than others. It's just understanding what you're dealing with. The most important thing is asking the questions so there's the more questions you ask, the more you're going to learn about your client and the more the solution becomes more apparent. It cracks me up when agents are afraid to ask the client questions. Like, how do you diagnose the situation without knowing their full situation, right? And now, Karyn, this was not a new client, or was this a para client?
Yeah, this is a para client, and we'd written a couple of her kids before and been reviewing her policies and making decisions. And now she had another, and we've also written one of her brothers. She's got 2 other siblings.
Okay.
To make sure have their pieces in line. She's kind of the defuncto matriarch of the family, if you will, now that both the parents have passed on. And she just wants to know there's no surprises coming.
Absolutely. That's cool. That's cool. When you got her trust, then, I don't think she'll want to work with anyone else.
Mm-hmm.
Very good. I love it. Great job.
Karyn,
Thank you.
is Did you explore at all if there was a conversion option? I was just curious if you even asked her about that, or is she about a conversion option on that $1 million?
No, we did not, because again, it's, well, no, I'm sorry. We did a while ago look at that, but she's got to make that conversion decision, Bruce, by next year.
Right.
And, just explaining the reality of a conversion on $1 million policy, you're either going to be dropping significantly in your death benefit, or you're going to be increasing your premium significantly. So,
Right. I was just curious how it compared to, number wise, how much payment would increase and all that. I was just curious.
no, it's, conversions have a place, but I haven't done a lot of them. Just in that premium difference and face value difference.
Right.
Yeah, when they get to be that old,
Around.
when they get to be that old, and then sometimes there's limitations with how far you can drop, $1 million policy on a conversion. Then of course they're paying, the permanent insurance rates, even if they drop down to 500,000 at her age now, which was early 60s, run rates on that can be pretty hefty. And then, the question is, does she really need all that insurance? I think
Exactly. Yep.
certainly,
And that was something I looked at with her. And I did run her an IULE for 500,000 just to show her. All right, if you really
there we go.
that million,
Yeah.
here's what 500,000 costs. Just
See,
as a ballpark number.
Yeah. Okay. So what you did was you fed the beast. You fed the otter, man. She was eating that stuff up. I love doing that. I love doing the what if scenarios. It's like, okay, well, if we, this is what it's going to look like. So if we converted it, let me show you an example of a conversion. And so this is very similar to when you're doing scenarios for clients, doing the what if scenarios, especially an otter like her, it's like, I'll just feed. So I don't know if I talked about it on this call or not. It was, I don't think I have. So this is a cool scenario. So, and I got to remember who it was I was helping with this solution, but so there's a client that was a cigar smoker, right? And we were looking at what to do to cover a cigar smoker, and coming up with scenarios. And we're trying to preserve we're trying to keep him at non-tobacco. So what options do we have? Well, we figured out an option. He wanted permanent insurance. He wanted the kind of insurance that you could grow cash value in. Unfortunately, the IULs and the other ones would rate him as a tobacco user. So that in essence would double his rate. And so I checked with Foresters again, because you never know if they're going to change their underwriting guidelines. So what we figured out was doing a strong foundation, simplified issue term at non-tobacco rates, right? So we would write him, I forgot the face value, 500,000 or, it was like 500,000, I think, on a simplified issue term product, non-tobacco. And then he can convert it to a smart UL, permanent policy, smart UL, 12 months to 24 months later, he can convert it to a non-tobacco smart UL. See, because if he got into a smart UL right away, he'd be considered tobacco, because smart UL is not like strong foundation term, because smart UL will consider, smart UL is any tobacco, strong foundation simplified issue term is cigarette only, right? So pipe, chewing tobacco, and in his case, cigar, you'd be considered not tobacco. So I confirmed with foresters, if someone got the non-tobacco rating, even though they were a cigar smoker, disclosed on the application with strong foundation term, simplified issue term, can they convert it to a non-tobacco rating on Smart UL? They said yes. Okay, I just want to make sure because we've done this strategy before, but you never know when they're going to change their underwriting guidelines. So I just had to confirm. So that's what we're going to do with this guy. We're going to write him a term policy, a strong foundation, and then convert it 12 months from now to the Smart UL. So it satisfies his desire to get into a policy that he could borrow from, et cetera, right? So I don't know how many of you knew that that scenario exists where you can do that. The other thing he was thinking of is, well, we can do a non-tobacco on America's Premier Eagle whole life. And we can write about a non-tobacco with that policy. And then, whole life, you can build a small amount of cash value and borrow against it. Particularly if you're putting a lot of, you're at a high death benefit. But he's paying whole life rates, right? It's going to be, the rate per thousand is going to be a lot higher than doing the strong foundation term first and then converting it later. Does that make sense? Did everyone follow me with that? Anybody?
Yes.
Anyway, it's a super slick way to be able to, so that's a fallback you have. So if you do have someone that is non-cigarette, you want to get them into a non-tobacco term, but they're looking for permanent insurance and their health can qualify for like a Smart UL, that is really the way to go. And that rocks. Plus it has living benefits too. So that also rocks as well. All right, man. Oh, and here's the other thing. If you converted the policy after 2 years, I think I did recommend after 2 years. If you converted after 2 years, then you can get fully commission on the Smart UL. If you converted after 1 year, you get some prorated amount of commission, but not the full commission. So I think I told him to convert it 2 years after, and then he could get fully commissioned on it and so on and so on. So, fun with underwriting, gang. There are some tremendous solutions out there. And as if you're brand new, don't get all freaked out about this because this is stuff that you're going to learn along the way. You just have to start getting experience under your belt with scenarios of people, and then we can help you with the underwriting strategies. Okay. So that's why you always call into me or your upline, your experienced upline, and we can really come up with some really cool strategies that can really maximize the benefit to the client that most other agents won't do for them. And I think what makes that possible is the variety of 40 plus insurance carriers that we're partnered with. And we can't expect you to learn all those carriers. Just throw at us the scenario and then we can come up with the right strategy. Does that make sense, everybody? So